Hello, my name is Kapches. I'm the President and CEO of Chestnut Park Real Estate. This is my December market report. Essentially, the year has now come to an end. There's a couple of themes that I'd like to mention that emerge in December. First one that we see is declining sales. We had a kind of a dramatic decline in the number of sales in December compared to December of last year. In fact, we were off by almost 22%. That's not surprising because we saw declining sales in November as well, so this is a continuing pattern that we've seen develop over the course of 2018. The other thing that we saw in December is declining prices. Not so much in December itself. There was about a 2% increase in December's average sale price this year compared to last year, but on a year-over-year basis, we've seen declining prices. So last year, we had, on an annualized basis, an average sale price of about $822,000. This year, that's dropped to about $788,000. Where we have seen a dramatic decline is in the higher end of the marketplace. That is, those properties that have a sale price of $2 million or more. That, in fact, has been a continuing declining number going back to 2016. It declined in 2017, and we saw a further decline in 2018. When your high end is declining in terms of the number of sales and the average sale price at that price point, is going to have an overall negative impact on your average sale price. We haven't seen the same depreciation in values in the case of semi-detached properties or condominium apartments. The other theme that needs to be discussed is the declining inventories. We saw substantial declines in available inventories in December of this year as compared to last year. And available product going into 2019 has also declined fairly dramatically on a year-over-year basis. So that becomes a real concern going forward. Normally, you would see prices rising when you have such declines in inventory. And in fact, in some areas where the inventory levels are so low, particularly in some of the eastern trading areas, Riverdale, Leslieville, Beach, we've seen prices continue to stay strong, and primarily because there's just no inventory in those areas. Going forward, the concern is going to be affordability, and as a result of that, affordability is probably going to see, certainly over the first 6 months, continued pressure on sales and continued pressure on sale prices, and I foresee some moderation of sale prices going forward into the first 6 months of 2019. I think that will change as we move beyond that period, but that's where we find ourselves at the end of the year with the December data that we have available to us. So I look forward to making a presentation to you once we get January data and we see how the year unfolds in the first month of 2019.